Alright guys, Madaz here, back for part 2 of how I traded SNGX today. If you guys didn't get a chance to check out part 1, just go ahead and click on your screen. There should be a link to part 1 where I demonstrate when is it actually reasonable to chase along and still make a good profit off of it. So do check that out. And as always guys, all of these videos, I get the drive to make them because of the support from the trading community. So please do like, share, post this video around, get the word around, subscribe to the channel, and this will definitely incentivize me to make more and more free, awesome content for you guys. So definitely love the support, guys, and keep it coming. So let's go ahead and pick it up right here. SNGX just before 950. I'm going to demonstrate right now in this part 2 of the video. Where I actually made a very poor decision, chasing, FOMOing, fear of missing out, slamming the bid near the bottom and getting taken on for a nasty ride. But I'm going to show you guys how I used the same technique where I recognized the tape speeding up, the same technique where I was able to chase the long in part 1. You know, I identified that the stock was going to speed up, and I'm going to use this to take a loss and prevent a bigger loss. So you'll see that I recognize that the tape is turning, and definitely I should bail and stop out and take a smaller loss and prevent some sort of massive rout and giving back all of my gains and then some. And you'll see exactly that. So we'll pick it up here just before 950. You'll see me take a very bad decision, make a very bad decision, and slam short way too early. So you'll see. Let's start the video. So you see the stock is kind of looking a little bit weaker than it was. You'll see the tape kind of now in a neutral. The chart's a little bit more neutral, but for the past couple candles, you saw that the stock kind of made lower lows actually after topping out at 466. That got me kind of preemptively short bias, and you'll see right there on this flush, let's just stop it right there. On that flush to 410-ish, it got me a little bit biased, thinking that maybe we cracked a VWAP. Of course, this is, again, a very bad decision. Maybe I guess got too complacent off of that 4.2K win on the long side. But for the most part, like I said, this video is about demonstrating how to stop out and prevent your bad decision from getting catastrophic. Right? We make bad decisions all the time. We're human, and this is a really good example. I'm finally glad that I finally caught myself making a bad decision and showing you guys how I managed it and how I took the loss. So you'll see in a second. Again, this is a poor decision. The stock is dropping and it looks weak, but you can kind of see that it's going to hold that 410 level. So I get in there at 415, immediately down several $100. And you'll see that the stock doesn't crack 410. I'm looking for a 410 flush toward $4. That's what I'm looking for, and I really should have just taken it all off when it kind of didn't flush. And again, it was a series of bad decisions, but do note that I started with 5,000 shares this time, unlike the 10,000 share starter. I always talk about downsizing your positions. Right after the open, you nailed the big win, you got to downsize your position. I mentioned this in several videos. Try to take some off here, only filled 800 shares unfortunately, and then kind of let it stay there. Don't get the fill. But downsize your positions, guys. That way if you get yourself in a bad spot, you make a bad decision, it's not going to ruin your day. So I started with half size just to prevent myself from getting stuck in a bad spot and giving back all of my gains, and then that's going to make me fall more into that revenge trade mindset, which obviously causes you to spiral downwards in terms of your performance on the day. So definitely right here, didn't get that full fill. I should have probably whacked out, but you'll see it kind of stalled here for a second. But again, the stock is not cracking 410, so it should have been pretty obvious. Again, kind of playing and toying around this 410, 420 level, and you'll see this thing kind of rip me for right there. Boom. It's kind of taking off right now. I still should have stopped out. Against my better judgment, I did take an ad here around the 440s, I believe, when I kind of saw that it was teetering. Again, not the best of decisions. There we go, I added. So now I got 429 average. At this point, I'm just looking to cover on the next to 430 flush. But you'll see in a second that this stock is going to catch a bid. I'm going to slow it down. So if you do note that the high on the previous candle was around 455-ish, and you'll see that when the tape speeds up, I'm going to stop out at 455 right away. There's a big offer there. It should have tanked the stock, but it's not. Watch. 455. Keep an eye on that level. The moment that gets taken out, this stock is going to skyrocket, and you'll see me make a gain-saving stop out in a couple of seconds. Right about, let's see, it's coming up. I promise you. Another big offer at 452. Again, doing nothing to tank the stock. There you go. Stopped out. Watch this. Boom. Stock makes new highs. 470. New high of day. Now watch this thing in a couple minutes. Rocket to 480. Speed things up a little bit, and you'll see this thing actually hit 490 in a second. Here we go, 480s coming back. You see kind of the same action I mentioned in part 1, the kind of bid supporting 470s now. Here we go, 490s are going to print coming up. Now it's getting some support in the 480s. Again, it's all about pattern recognition, guys. Although I got myself in a bad spot, you know, it was a series of bad decisions, but I prevented myself from getting absolutely decimated. Again, trading is not about always being right. It's about, when you're wrong, limiting the effects of being wrong. If you're going to be wrong, at least make it as painless as possible. As you can see, the stock's not getting back below 460, which was the previous highs, 466 to be exact. I would have been screwed, obviously, if I didn't stop out in the 450s, seeing how the best I would have gone here is 460. Now you see the 490s. So there you go. So let's just go back and look at this for a second and let's just talk about it. Obviously, you saw I had a 429 average, almost 10,000 shares. Obviously, if I kind of held and hoped and didn't recognize the speeding up of the tape and didn't stop out, you guys can do the math, right? It would have been pretty bad. You know, I would have lost 60 cents. Would have been a 6K loss. I would have went from being up 4.2K on a day to being down $1,800. So that would have obviously undoubtedly frustrated me, as it probably would frustrate a lot of people. But again, you know, bad decisions are part of trading. You know, obviously you want to make as little bad decisions as possible, but when you do, you got to quickly recognize that you're wrong, and you got to get out before things get out of hand. So, you know, some people might have added, and then, you know, got stuck, even more shares as this thing went to new highs. And obviously that's not what you want to do. So let's just go ahead and rewind exactly again the moment I stopped out. And again, it's the same thing. The moment I stopped out was this seconds, literally seconds before this thing took off to new highs. So some of you guys that kind of watched the first video and like, oh, he just got lucky. You know, he just happened to get in the moment the stock spiked. Guys, I just pulled it off pretty much 2 times within a span of 15 minutes, right? So with experience, I've been doing this for 6 years. I kind of have a good idea of how this thing works. So let's just go ahead and see again. Let's just slow it down. As you can see, the stock is kind of, the thing that tips me off is the stock has a big offer and it doesn't go down. There's a big offer at some point and it doesn't go down right there. There was a 20K offer at 452, if you guys kind of saw that. So just rewind it for a couple seconds. There's also a 9,900 shares there. Boom. You see the 20K offer at 452. Normally that would probably cause some sell pressure, right? But watch, he gets taken out or he pulls the offer or something like that. And look what happens. The moment that happens, this stock takes off. That's my cue to stop out right there. You see me realize the 2.2K loss, and this thing takes off to 470. I mean, that's tape reading like in a nutshell right there. You look at it, you see the big offer, stock doesn't tank, bids kind of show up, the guy pulls the offer, he gets taken out, stock rockets to new highs, and you had like maybe 3, 4, 5 seconds to make the decision. And if you didn't do it, obviously now I'm stuck covering the 470s. I'd be down like 5 grand, right? I'd be down all my profits on the day and then some. So again, guys, it's always about making these micro decisions, split-second decisions, not being stubborn. Bad decisions do happen, but mitigate the effects of them. That being said, guys, hope this helped. Look forward to part 3, which is going to be coming up. And part 3, we'll discuss the change in bias and how the stock went from a long to a short and how it became a stress-free short. I knew the stock was going to go down for sure. And I was able to cover a downsize, of course. Made only a couple $100, but it's a good example to show you guys how the stock became a much more obvious short versus trying to jump in front of the front side train right here. So that being said, guys, see you guys in the next video.